Hello, it's Fred again, and I'm joined here by Alfie. We work on the fuel broking desk at Onyx Capital Advisory. Like every fortnight, we will discuss what has occurred in the fuel oil market in the past 2 weeks. Please feel free to leave a comment or reach out to any of us on the fuel desk to tell us your opinion and what you have seen. So Alf, what have you seen in the high sulphur fuel oil market this week?
So Fred, we've seen strength in the high sulphur complex, primarily on the Asia side. We've seen the East-West rally up to 22.25 on the 11th of July, and then soften to 22.5 on the back of less activity in China. From a flow perspective, we've seen the East-West rally because we've observed a range of market participants buying 380 flat price, 380 spreads and 380 cracks, alongside a week of 3.5 barge spreads. Later on in the week, we've seen 380 and 3.5 barges, spreads come under pressure due to the cracks becoming under pressure. However, the East-West continued to rally up to 23.25 as 3.5 barges weakness outpaced the 380 weakness. And then since the 3rd of July, 3.5 barges cracks have overall been offered, initially trading from minus 765 on the 3rd of July down to minus 960 at the moment. Also looking here, Balmo July Org and Org SEP spreads, 3.5 barges have seen the most weakness, trading from 950 down to 575, and Org SEP trading from 12 down to 475. They're both now currently trading at 4 and 6.5. And then on the Visco side, Org Visco has been pretty volatile. The 180 market showed its first signs of strength in several months, with cargoes lifted at a competitive price in the physical window. This caused physical players who had previously been scaled back buying Org Visco to begin aggressively selling. Over the past 2 weeks, we've seen the Org Visco trade from 650, come off down to 350, and then rally back up to 7 on the 12th of July, and we're currently sitting at 6.5 at the moment.
Okay Alf, what news have you seen this week in the high sulphur fuel oil?
So on the Asia side, we've seen the high sulphur fuel bunker sales fell 8.5% from May to a 12-month low in June, although they were up 17.5% year on year from June 2023. High demand for the high sulphur from the utility sector amid peak summer supported prices, but downstream bunker demand was inconsistent. On the European side, we're not seeing too much news on there. However, like I mentioned earlier, weakness is more concentrated in Europe than Asia, and it might be due to a possible reversal from the previous bullishness we saw due to power generation demand with the 3.5 barge spreads. It looks like there may be more people taking long profits, while 3.5 barge cracks have also fallen below previously supported levels, which may also indicate more profit taking and just an overall shift in sentiment. That's what I saw in the high sulphur market. What have you seen in the low sulphur market?
0.5 barge, we've not seen much action. Augie set was up yesterday from $5.25 to $7. Before that, it had been pretty range bound. 0.5 barge crack, Augie was a bit more choppier. We had loads of 340, and it was up at $4 today, the 19th for Friday. Scene wise, Augie set range bound again, between $6 and $6.75 for the last 2 weeks. And the Sing crack, we'd seen a rally in August on the 12th on Friday. That went from 10.10 to 10.65. We saw it fall down at the beginning of this week, and it's come back up a little bit to 10.45. East-West slowly declined. It's been at 38.75, and then it rallied up yesterday, and it's now at $41.
Nice. So what news have you also seen?
Saudi fuel oil imports rose in June to 350 barrels a day, but that's been to high power demand in summer. There's not been much else we've seen. It's the same story. It's been tepid demand for very low sulphur fuel oil in Asia. We have seen a slight pickup in the last week or two. Again, that's probably down to summer seasonality.
Thanks, Fred. Also, thanks for watching. Tune in the next 2 weeks for another update on the fuel market. Like and subscribe.